Hello, guys. Good evening to you all. Can you hear me?
Yes, we can.
Okay, and can you see my screen?
Yes, we can.
Okay, so let's get it started. We should start by asking what should we do exactly today? What do you want us to talk about?
Uh, when you place your, when you have a demand, do you wait and buy, or you wait for the price action to complete before you buy?
As in when there is a
Especially
demand
like,
zone.
yes.
Yes, when there is a demand zone, I wait for it to come. I wait for price to come to it.
Okay, now that where we have Bitcoin price that is still at supply zone,
Yeah,
and it can likely drop. And you know, it's Bitcoin controls
the market.
the reaction of other, yes. So it's likely to fall and break all the demand zones that are close to it. So compared to other coins now, when you have closed demands now, are you going to place your demand to the closest one, or you will wait for the market to react before you now buy?
Okay, this is a thing. For Bitcoin, yes, we're currently on supply. Like this is the 4 hour time frame. So this is the supply at which we are. But then there is one thing, if you notice something on this particular 4 hour time frame, I think you can see the chart, right?
Yes, yes, yes.
Okay. Now, this green box is another demand on that particular 4 hours. This was a supply created from 18th March. That's 18th March. And it has been holding till now. But look at this particular candle. This particular candle, if you look at the tip, let me mark the tip. Let me mark the tip of this supply. As you can see, the price is 6129. Can you see that? The price line of this tip, that's the distal line of the supply, is 6129. And if you look at this particular last candle, it has stripped that supply. So we have an higher high to that supply. Can you see now? This very high of this very candle is 6200, while the proximal of the supply is 6129.97. It is by very little, very significant. But then if we have to look at it, the supply has still been tripped. And then we have this demand below it, which that was where the move originated from. So, and as you can see from this supply, this demand has been holding, and even this present moment is still holding, because we are having something like an hammer right now. And until this candle closes, before we know what reaction is going to follow. But then looking at the fact that this candle tripped this supply, that means there is high probability that this demand zone is going to hold. It has been holding for the first time, and this is the second time it's coming to test it, or even the third time. If we can't candle by candle, this will be the first, this will be the second, and this will be the third. But if you look at the movement together, then this will be one, and this will be the second time it's coming to test it. And then look at the coming trend line that was once broken but reclaimed. Now price is back at the trend line, which is right inside the demand, below the supply. So the fact that this supply is trimmed, and there is a trend line right inside of this demand, and this demand is still holding, then I wouldn't say that these demands will break for now. I'll be expecting this supply to break. But then the fact that it's also resisting price so far means there is two things that is probably happening. Either people are trying to accumulate, or people are not sure if the price is wanting to go higher. So people they are indecisive. But looking at this demand, until this demand breaks, that is where we can then ascertain that the price is likely to go down. But the fact that this supply now has broken means we should expect price to go higher. Are you getting it?
So I see there's when you trace there's a trend line from the last drop at 51,000 down to the last high, which is about 60,129.
Yes.
And there is a very
Is it the
slant
very
sloping
last
line.
swing guy? That is 61.8 something. Or which of the highs?
The current high.
Okay, this very one. That is this very one.
The last high that we have, yes.
Yeah, this very one.
60,200.
60,200.
Yes.
Yes.
And then the last from the last low, which at demand zone.
This one.
Which is around
56.
50,900.
Is it this
50,900.
50,900. Let me see that.
No, down.
Oh, this very one.
51,000.
Okay, the swing low.
Yes.
Okay, this very low. Okay.
Yes. So the is a very slopy line, and the current drop now seems to have broken it.
Okay.
Seems to have broken that trend line until the current candle completes. I feel like that's
this is what you are
trend
talking
line
about.
has already, yes.
Let me remove this.
Yes.
This is the one you are talking about.
So I think it's already broken. So I expect, yes, exactly. You just drew what I wanted to, exactly what I was saying.
Okay.
So I think until the current candle closes, but I think it's the price action, the market has already completed. So I don't think there's anything to wait. So for me, I already sold my Bitcoin. I bought yesterday night at 58,800 or so, and then set 0.8% stop loss, which thing has broken it. I expected it to reach 62,000.
Okay.
Which is a close, which is going to be a close today, a high close today, but it's broken it. So I would rather wait and see it react. But need to, because it has, I expect it to drop further. If this current demand doesn't hold, then we'll be going down to the next demand. So that's where I was now asking if you place your demand and wait, or you wait for the market to react. Then you now, if you are not in the market yet.
There are two things you can do. You can there are two things you can do.
Your point is stopping.
So there are two things you can do. You can either wait for confirmation on lower time frame, or you just place a pending order if you are that aggressive. But the fact that the trend line has broken, if you watch that trend line lesson, the fact that the trend line has broken, we still have this low in place. Remember, we still have this low in place. This low is still intact. It doesn't mean that the structure has broken. It's just a signal that there might be reversal on this particular pattern. So if you try to do something like a channel on this movement to the upside, if you do like a channel to the upside, yes, the channel is broken, quite all right. And even we do not have so much interaction with the trainer that has been broken. So we have a test of demand now, a proper test of demand. So we have to see the reaction on this demand zone. So if I am to place this trade, I wouldn't look at the trainer at all because we have so many fake outs. I will place a trade at this demand and have my stop loss just below. And we have series of demand. If you look at other time frames, we have series of demand on this particular Bitcoin chart. So it's very interesting how this thing is going to play out. But then looking at the general market structure as well, if you go to the daily chart, you can see the market structure is quite obvious. Somebody's microphone is disturbing. Somebody's microphone is disturbing. So if you look at the daily time frame, you can see that the structure is still in place. We have this low to this side, then to this low, to this side, to this low, to this side. Now we have this low. This is the current low that we have right now, right? And we have series of higher lows and higher highs. So for this to even be in place at this moment, and we have this movement coming to the upside, forgetting that this trend line is broken, yes, it wouldn't happen in a straight line. We might have series of up and down, up and down, up and down. But then the idea is we still have to see an higher high or a close high to this last high and probably a rejection. If it gets rejected as this upper demand zone, upper supply zone, then we can expect that pattern that is called double top. But until then, we have to anticipate that the market is still bullish, which is still bullish quite all right. And then we have to anticipate that the market is going to make an higher high until we see the failure. Right now, we are just seeing a sideways action in the market, which is a base, like I said in the supply and demand lesson I made this morning. So it's making a base. We can either have a drop to test the lower demand before continuing to the upside. And then if we break this particular lows at that 50,427, that means the correction, or either the correction is over or we are going fully blown bearish. So until that, we can't ascertain what is happening, but we can just believe that we are still in a bullish structure, which quite all right, we are still in a bullish structure. Lower time frames, when considered the daily time frame, all the 4 hours, they are just noise. Whatever happens on the 4 hours, they are noise. If you look at the previous movements, like if you look at this particular movement, at this particular point where we have had this bearish candle here, on the 4 hour, it will be like a full retracement or full correction, serious one. But then at the end of the day, probably it got tested on demand and then it continued the rally. And likewise, every other time you have seen so much rally, we had a bit of pause. Likewise here, on this particular area, we had this small pause, which was even an ascending triangle. And I was even expecting it to break down for further retest of this level, but it didn't. And then it continued upwards. So every time we've had the rally to the upside and making it all-time highs, there seems to always be a little pause in the market. And this particular pause won't be anything different from what you have experienced in the past. So when you look at the daily chart, that is why they say you have to follow the higher time frame structure. When you look at the market structure on the higher time frame, That is a trend of the market. So the trend on this particular market on the daily is signaling that is bullish to you. So whatever you do on the lower time frames, like the 4 hours, you do not want to trade against the major trend. You can play some counter trades, like you short the supply for a quick one, but then you are ready to buy back at the nearest demand, because the market structure on the higher time frame is still bullish. So you are expecting it to continue that bullish movement until the demand zone starts to break, and especially the structure changes on that higher time frame, which you play precedence to. You understand?
I understand.
Yeah. So the market is bullish daily wise. This small movement, we can just see maybe some people are trying to reaccumulate, and then we see an explosion to the upside, making new all-time highs. So daily wise, we are still in a bullish market structure until this very low is broken. And the fact that it's not yet broken means we still have to keep that bias that we are bullish. No matter what the 4-hour time frame is doing or whatever is happening on the 1 hour time frame. And that is why we have this demand zone on the 4-hour that is still holding. And if this candle closes like this and the next one closes bullishly, or even like this, you know what people will do? People will start to go long again. So, and I think this candle will even close in the next 45 minutes, and it's looking very hopeful at this moment. So the demand is still holding us at this time. So if I were to take this trade, definitely I will go long at this point, being the fact that this supply has been taken out already, even though it's by very little amount, but taking out is taking out. Either call it stop out or anything, it's taken out already. For that fact, I will be optimistic in longing this demand zone here. You grab?
I do.
Okay, any other question? Any other question? Anybody? Or we should just go into supply and demand straight?
Yeah. Good evening, sir.
Good
Good
evening.
evening, sir.
Good evening.
Yeah, can you hear me?
Yes, I
Yeah.
can hear you.
I saw a chart you sent about
Okay.
BNB. You talked about BNB still retesting around 300 region. Do you think that on the daily chart, like you use the daily chart, do you think it's still possible for BNB to retest such area?
To
In your
retest which
opinion,
level? Let me mark the level.
you said 300 area.
It's above 300 as at this moment. Or you mean 200?
300, like 300, not 300 and something. 300.
But the price is above 300 as at this very moment.
No.
You
Yes,
mean
I'm
you mean
talking.
you want
Yes,
it to come down to 300 and then continue
yes,
up?
like
Yes, it's
yeah,
very
you said
possible.
something about it.
It's very possible
Sir?
because it's very possible. Looking at the daily time frame, can you see the chart?
Yeah.
Yeah, we have a demand here. I'm using my demand indicator right now. So we have a demand here. We have a demand zone
Okay.
here. That is a demand zone, and it has been confirmed based on the fact that we have this rally, we have this base, then we have another rally here. That is 3 candle formation. Then we have this candle making an higher high and higher low. That is a bullish market structure on its own. Just these 2 candles. If you expand on these 2 candles, this is what we're going to have on lower time frame. You have from this lows to this side, then an higher low, higher high, higher low, higher high. This is what you have on these 1, 2, 3 candles when you expand to lower time frame. And you know this is a bullish market structure, right?
Yeah.
So for you to have this bullish market structure in place, this next candle now I think is making some kind of equal lows but lower high. It's not looking good right now. So our expectation is the price is likely to come down into this demand zone from this very price it is, come down into this demand zone and then rally up. And if we look at the proxima of this line, that is a 312, and then where the invalidation may be for this is 283. So that is a full demand zone. So there is every possibility that BNB will come back into this zone for a retest before continuing higher. And looking at this movement that is not looking good so far, there is even higher probability that it is going to come into that demand zone. Also, when you look at what BTC is quite doing right now, BTC is on test of its own demand. You see it? BTC is testing its own demand on 4 hours right now. So if you look at 4 hours on this time frame, on this chart, let's see if we have, there is no demand zone except the daily, which is at this point. And we even have a very close movement to it already. And look at this, we have this candle, then we have an lower high and lower low, even though it's closing like a doji or spinning top. But then we still have to expect that price will come back to it. And then if you look at your trend line, we have this pattern right now in place. We have this descending trend line, this descending, what's it called, diagonal resistance. So it's pushing price down. So we can have a sort of movement like this, sort of movement like maybe from this point back to the trend line, something like that, onto the demand zone, and then a break of this descending trend line. So something like that is likely to happen on the lower time frame. So we might have a retest of this demand. And if at all, if this particular demand gets broken, there is another lower demand that I'm even expecting. This demand has been holding quite all right on the daily. This demand has been holding. We have a test of it here the first time and the second time, leading to an all-time highs right now from this second retest. So this demand is still there. Then there is another demand even here, right here. There is another demand even right here. So we have series of demand that this might fail only to get a week into this one and then continue to the upside. Are you getting it? Because sometimes there are demands on top of demand. Then the upper demand will be stop onset into the lower demand. Then at the end of the day, you see a week. Like you have a week here, this kind of week, you see a week into it, and then the rally continues to the upside. So there is every probability that price is coming back into these zones.
Thank you very much, sir.
Yeah, you are welcome.
Yeah.
So do we have any other question? Do we have another question? Or people are afraid to ask questions?
Sir, can you explain using volume in? Or someone wanted to say something.
Good evening, sir.
Good evening.
Sir, I watched your previous video you shared on YouTube.
Okay.
First of all, I need to comment on that. Thank you so much.
Yeah, you're
You've
welcome.
really opened my mind on the demand and supply. Sir,
Yes.
this particular this base candle
Yes.
before these two rally up.
Which one?
There's something like
This
a doji.
one.
That place, the
This
second to
one.
the last demand. No, the second to the last. Yeah,
This very one.
that particular candle.
Yes.
Yeah, that particular candle.
Yes.
Is this so significant in terms of demand zone?
No. You know, when talking about demand zones, let me try and maximize this. This is the candle you're talking
Okay.
right, Abi? This is the candle, right?
Yes.
Okay.
Yes.
It's like a basic candle, an indecision where indecision came into the market between bulls and bears, where they do not know what to do. Let me just put it that way. Or where we have an equal match 0-0, a draw between the two warriors. And then we had an explosion. But then it is not that doji candle that I'm using to take that demand at that level. It is the inside bar. If you notice, we have an inside bar there. That is an inside bar, if you notice that. We have this bar, and we have this bar that is contained within the highs and lows of this particular candle. And if you watch the price action video, you notice where I said an inside bar is series of two candles, 1, 2. But when you have the third candle, it's like a continuation pattern, right? But when you have the third candle breaking out like this, it becomes not just an inside bar, but a 3 inside out. Which in this form, we have the 3 inside up. That means demand came into the market because inside bar alone is showing you that either there is a triangle, which is a pattern like this, this pattern, that is a symmetrical triangle if you look at it on the lower time frames, or a consolidation. That means there was complete indecision, and this particular doji candle was showing us that there was complete balance between supply and demand. And then the next candle, which happened to be the inside bar, still confirmed inability of price to go above this side or go below this low, which probably confirmed that there is balance between supply and demand. And then when this candle came into the play, It started bullishly with a little wick, and then it closed very bullishly, almost like a Marabozo. That shows that there was heavy
Okay.
demand coming into the market, originating from this point here. So that is why I have my demand zone at this particular point.
Okay,
Are you
sir.
getting
Okay,
it?
sir.
That
Yeah,
is why
thank
I
you for
have
the
my demand zone
explanation.
like that. You are welcome.
Okay, thank you.
So I was asking on volume. Is
Yeah,
there can we use volume to determine the current action of Bitcoin now with um, uh, Bitcoin?
as in the current direction
Yes,
on the daily or
on the 4 hours
on the 4 hours.
and even the daily, because when you look at the daily,
Yeah,
the volume it's been bullish. It's been bullish. So if when you look at the daily, you see that the volume has been dropping
let me see.
on the daily.
Yeah, the volume has been dropping because there seems
Mm.
to not be any genuine demand coming into the market. Now look at this. This is what we have to do now. We have to check this move against this move. So from here, we have this. Let me mark it. That is, we have this move from here to this place. We have the volume. Majority of the volume were quite below average, as you can see. That shows weakness in the Bitcoin market, all the way from 30,000 to 58,000. They were mostly below average candles. I mean average volumes. Then when we look at this point to this point, that is a retracement. That is from this point to this point. We had the initial candles were above average, which showed a loss of selling momentum, a lot of selling pressures. But then they reverted to being below average. And comparing this volume here to this past volume here, it's still declining, which means this down movement wasn't that serious. Then from here to this point, that is to this point, from this point, the volume also was not good at all, even though it shows an increase when you look at individual bars. It showed a little increase, but compared to the other bars, it was quite below average. It was quite low. And then when we made this all-time highs, remember I said it's not impressing because it wasn't impressive because it didn't go a bit higher. I would have expected it to go higher. But then having two daily closes above the last sign was still a good sign that we are still in good condition. So looking at this last down move, that is to this point, from this point. The bear volume was also not encouraging. In fact, just look at the MA. All the way from here, it's been declining. It's been declining, which means the momentum either on the bull side or on the bear side is weak, because all the times bears have been selling, the volume has been low. All the times bulls has been buying, the volume has also been low or below average. And the MA is pointing downwards, which shows that the market momentum either on both sides is weakening. And this is evident that it's like the market is ranging at this particular price line. And if you look at this point, this last size to this last low, from this low, yeah, this low to this side, the last swing up, price has been in between this high and this low for a while now, so it's quite ranging, and that is predicted by the volume that is declining. Now we might have an explosion to either side, either to the bull side, either bulls come running and buying up to go to the 100k that they want, or bear step in. So any of those things is likely to happen. And if any of those things is likely to happen, it is around this particular high that we are going to see exactly what is going to happen. Which is why I'm waiting for this particular high to see the reaction on this side before I sell my Bitcoin. If we have a trigger of stops on this side, like we had recently, like we have an ounce of this size and then a close below, definitely I'm selling. If we have a close above it and the second day another close above it, then I will definitely hold, even though it has to retrace a bit. But having two closes above the last time shows that there is at least a bit of desire for price to go up. But then the volume is been low. it's been low. And considering the fact that price has been rising from this point and then the volume is declining, it shows that we might have a correction. But the correction may be minimal because we have demand zones. And demand zones are points at which bulls can step in at any time. Are you getting it? Bulls can step in at any time. That is why at times we just have to watch the structure at which the market is printing. The volume is low, but at least volume is still coming bit by bit, just that it is below average compared to price volumes, to past volumes. But then we have to just stick with market structure and believe once demand start breaking, if this demand zone breaks, this one breaks, and this one breaks, that means BS are now in control. And then we probably have a lower high. On retest of whatever zone is breaking those things, I have to sell. I expect price to go for even a deeper correction. Now let me quickly dive into the Elliott waves here. Now, you remember I said we have like, this is like 1, 2, 3, 4, 5. And then this probably seems to be ABC. Like this probably seems to be A, B, C. That means, I don't know if you can see this clearly. Let me remove some of these lines. Okay, so we have 1, 2, 3, 4, 5 up to this point, right? Then we have A, B, C. I even expected this C wave to even go deeper, but not breaking this low, or even if it breaks it, but not breaking the last low. But then, oh God. So the way we have it here, we just have to accept that, okay, probably this is a correction for this swing itself, ABC, which means it's a bullish swing. And then, you know, we have subwave. So this can even be a subwave of A on its own. This can be a subwave of A like this. Like we have here to here as A, then we have here to here as B, and here to back down here as C. All these are probability. But then we have to see exactly what happens around this I for us to determine based on the fact that the market structure is still bullish. Are you getting it? Now let me look on the 4 hours and see. The 4 hour, the volume seems to be up and down, up and down, up and down. So on the 4 hour, looking at this particular movement from here to this particular highs that we have. That is, we have below average volume, and then volume came into the market at this particular point. And for volume to come into the market at this particular point, and then we have a very decent candle close, that means the genuine demand came into the market at this point. That means even on the 4 hour, we should have a base here and a demand around here. So if these demands eventually break, there should be a demand that we hold around this level, based on the fact that we have a very large volume with a very large candle that came into the market. That shows demand. And since then, every other candle and every other volume bars has been quite low to this particular candle, to this particular volume bar. Looking at the bearish candle as well. Looking at the bearish, oh God. Somebody's microphone is disturbing. So looking at this volume all the way from there, the bearish volume, there were huge bearish volumes, but the price action, but the candle bodies didn't quite reflect the volume that were coming to the market. So it showed that there were buying pressures. For volume to be this huge, and then the candle is just like a doji, that shows that there were a lot of buying pressures entering into the market. And then we had the rise. We also have an above volume buy here. I mean above average volume, sorry about that. Which then we had a demand here. The demand here was stop on Z, but it created another demand which is quite odious at this very moment. So the volume is not looking good generally, and now we have a rising volume on the bear side. These particular 3 candles, 1, 2, 3, If you look at this last two, we have each volume on the bear side. But looking at this particular candle, look at the entire candle size. That is from the lows to the highs. That is from the lows to the highs. Do you think this particular body is printing now? It's like 50% of the entire move. I don't think it's up to. And then we have this above average volume. For this bear movement to have this such amount of volume and then a little candle body, it shows that there is buying pressure coming into the market, but not yet strong enough to overpower the bears. But the buying momentum is there. Price may still go down until we find that volume which is big enough to overpower the bears. But for the volume to be as this big and above average, and we have just a little body not reflecting the volume is showing, that means there is the majority of the or either 50% of the volume we have here are buy volume. You understand? You understand?
Yes, sir, we do.
Oh, okay. So which other question? Any other question?
There's not much question.
So we
I
should
only
just
see
do some
demand and then I see support.
we should do supply and demand, right?
Okay.
Oh, okay, just somebody should
Yes,
suggest
sir.
a coin. Somebody should just suggest a coin. We should just look at.
ETH BTC.
I don't like trading that coin. I don't know why. ETH BTC. Okay, let's see ETH BTC. I've never traded that coin once. What time
Or
frame?
LTC BTC.
I don't even trade LTC as well. BTC. What time frame?
4 hours and daily.
Well, let's start from the daily.
4 hours and daily.
Okay, let's start from the daily.
Or we can look at link.
Link.
I choose these coins because no matter whatever coin I'm trading, I love to trade a coin that has very good
volume.
value stay, like Link, ZEC, Ethereum, Tezos, XTZ,
Oh, okay. So which one should we look at in particular now?
and a couple of other major coins like ADA and Tron.
Okay. So which one should we
We
look
can
at
look
now?
at we can look at this current one then.
Which one? LTC.
LTC BTC.
Oh,
LTC.
okay, this is LTC. So looking at
Yes,
the
sir.
starting from the weekly, I like to see the structure. The structure is not so good. We have like this descending move all the way from here like this. We have this descending move. So then we have this lower ones if we are to draw that. So it seems to be forming a kind of falling wedge. But then it has not retested these highs for quite a long time. So then I will draw another one from this particular highs like this. Then we see have a channel, right? This low, this high. I will expect price to even come down a bit. But then as we know the market is bullish, we might not get that. Okay, now looking at the daily. If we are to identify supply and demand on this particular chart, let me first say this. We all know now that demand is area where huge demand or huge money came into the market and we have huge rally. So whatever we are looking at is huge rally. We are looking for strong moves on the market. And whatever areas we have strong move, we want to look at the base. The base of those strong moves are where we are likely to have demand. And then the origin of strong move downwards from up are where we are likely to have supplies. So looking at this particular LTC chart, we have this diagonal resistance trend line, and then we have, it's not even printing a major structure. It's looking bearish, not to lie. It's looking bearish. I can't even see it clearly here. So we are even in price discovery to the downside. So until a demand prints on this particular coin, I won't be trading it at all. I won't be trading it. We are likely to come to this highs, this particular level here, and find, what's it called, and find supply. There are many ways to identify supply, which I will be talking about that when I make the next supply and demand lesson. So this is a supply. This was a support, kind of support, and then it was broken by this move here. We had this pump, then that means for us to have this pump, even though it might not be a genuine one, that means we should have a demand at this level. We should have a demand at this level. But then it was broken by this move that originated from here. Some people will use this whole candle as their supply, but that is not good enough. But I personally will use like this. So this will be a supply until this particular level breaks on the daily time frame, before I will be looking for whatever candle broke that for me to long on daily. Now let's look at the 4 hour. The 4 hour is a different thing entirely. Looking at the 4 hour, we have a break of trend line rolling from like this, at first like this, then we can extend because we have a low here, lower than all these lows, then we can do like this. Then we had a break of it. Personally, this is a huge move. Then we had continuous higher high and higher lows. That means the base should be a demand like that. And for the base to be a demand, it held, but then what happened? We have a stop point of it. It got stop pointed. As you can see, the fake out. We have the first candle that broke it was an hammer. Then the second one closed quite below it. Then the next one closed just right back inside of it, which means it was a fake out. And then we had this rally. So this trend line has been completely broken. And for this trend line to be completely broken means we are expecting price to at least come into this area here. And then if we look at this supply that I identified on the daily here, which was from here, sometimes you have to refine it on lower time frames. So if you go onto your 4 hours, you have to look at the origin of those big moves. Where did the origin start? Or where is the base on 4 hour? Now looking at this up movement, we saw that this was the base. We had this green candle. Then we have this candle not moving higher, not moving lower. Then another one not even moving higher, not even moving lower. And then it was even an inside bar. I wouldn't take this because the candle is so big. But look at this red candle. Then look at this next green candle. This green candle, the highs and lows were contained between the highs and lows of the red one. So we have an inside bar here from this side to this low. And then we had the break, which means 1, 2, 3 candle was a 3 inside down pattern. We had a quick retest of it and then a continuous downward movement. So refining the supply on lower time frame of the 4 hour, we take the base to the very highs. So we have refined the daily supply to a 4 hour supply at this point. And then this was the origin of the trend line that I drew, which got broken and then got retested, haunted some people, and then it's coming back up. That means price is possibly coming back to the heights here. And then when price gets to that high, we have a supply there already. So we expect probably a bit of correction. And then if this level gets broken, we have to look ahead and find maybe other zones. Even previously, we even have other zones there as well. So this zone now has become what we call support and resistance, right? If you look at all this level, then you have to mark it up to this extent. You can refine it like this. We have this point of resistance, this point of resistance, this point of resistance. That means that we have 3 points of resistance. So when price comes back here, we expect resistance, even if it's just for a few minutes or for a few hours or for a few days. But then a break of this entire structure here will become bullish, which means we are likely to go even higher. So until this breaks, I won't be trading it. But then looking on the 4 hour, it's a different story already. We have a structure to the upside. Like if you draw your trend line up like this. And it's like we're even flirting with the trend line here already. This is not a demand zone based on reasons, other reasons that I'll talk about later. If not, it could have been a rally-based rally. Then we have a base. You're disturbing me. So we have a base here, then a rally here. So here also we have demand at these particular levels. So the demand at this particular level, we are breaking this trend line into the demand at this level. So we expect a reversal from this level and continuation to the upside. So I won't be looking at LTC until this level breaks personally. I don't like trading these coins.
So you said you don't like trading?
This coin and ETC, I don't know why. Their movement looks kind of slow to me. They don't react as well as I want. So which other one should we look at now? Are you clear about that?
When they move, they do. They move.
Yeah, when they
Yes,
move,
I
they
do.
do.
I
But
am.
then
I
I
am.
just don't. There are a lot of coins. How many are we going to look at? Over how many coins on Binance? Over 500. So which other one should we look at?
Link.
Link. We should have Link here. Link BTC or Link USD?
Okay, let's look at CVC. Let's look at. I can USD. I can see CVC. Let's look at CVC.
BTC.
USDT.
USDT. Daily, right?
Yes.
Let me first start from the weekly. Oh, we have a bullish move here. A very bullish, a parabolic move, sir. Very parabolic. It's hard to draw the trend line, so it's very parabolic move. So we're going to the daily. You know, this, we have a huge volume here. We have this decent candle as well. But then the indicator is not seeing it as a demand, because personally, I wouldn't trade it as demand. If you ask me why, if you look at this move here, we have these lower wicks going below all other candles lows. That shows bearish actions. There were a lot of bearish action or action of the BS of this part. And then looking at this big candle, even though the bull stepped in and won the show, it went below this particular last red slow. We showed that bears were very, very active at that point. So this may be due to not the new demand coming into the market. So personally, I wouldn't trade this as demand.
I currently have my demand placed on this particular zone now.
Which?
On top of the zone.
This one?
That yes.
Yeah, it can hold. Definitely can hold. But personally, myself, I won't take it. I won't take it personally because of these lows that we have. If assuming this green candle's low did not go below this red candle's low, I will take it without no hesitation. But for me, seeing this low lower than this low, I wouldn't take it. I wouldn't take it. Or if you want to take it, you can take it with confirmation on lower time frames. There is so much interesting thing here. We have support and resistance here. So it's also a point of resistance turning to support. But let me look on the 4 hours. Right now we have supply at this point. On the 4 hours, we have supply at this point. We have a base now here. We are having a base here. So whatever is going to come out of that base.
Out at the current price.
You say?
I got taken out at the current price. Now I put my stop loss just below the last week.
This last week?
The last bullish week.
This one?
No, the top one. Yes. That week took it off. Yes.
Yeah.
So I put my current price candle now, taking me out of the market.
Wow. With this week, I'm taking, and now it's closing bullishly. Bracket, eh? So this coin, I don't really like it. I don't really. On the 4 hour, I'm not seeing any zone I will take. Even though you might have a demand there, as this is a rally-based rally, As this is a rally base rally, we have a base here. This is a base where price couldn't go higher, couldn't go lower. Then we came and made this very good candle breakout. But then it's also made a low lower than this low. That is one thing that won't make me to take it. That is one thing that won't make me to take it. And at the end of the day, you got stop wanted. But one thing you can do to avoid stop wants is look at the size of the zone. If you are taking this, are you using the wicks or you are using the candles open and the close like this?
Sir?
Are you using the wicks to enter or you are using the body?
I use the body to enter.
Okay, so what one thing you want to do is when you use the body, just take your measurement tool from the body to the lows. Look at how many percentages it is. It is 5.42. Just divide that value by 2 and add it to your zone. So this means that we have to add around 2.7% to this 5.2. So when you have 5.2, 5.4 to 2.7, that means you have around 8%, right? So just take your from your entry and your stop, make it like around 8% or 8 point something percent. You see that it's just around that area of that stop hunting. Let me calculate this very well so I get the exact value. Okay, 8.13. So when you take 8.13%, that is the zone itself plus 50%. That is 8.13. Sometimes this thing are very hard to get. Okay, if this is 8.08, that means 8.13, you won't be taken out. Are you getting it? So that is how you can avoid being stop hunted. Just take 50% of the zone's range and add it as a stop loss rather than just guessing the point to place the stop. Because if you place it too tight, you might likely get stop hunted. You get that vibe? Hello?
I'm here.
Okay, I said, do you get the vibe for the
I got
stop
it, I
hunt?
got it.
Okay.
Yes, sir.
But particularly, personally, this course I wouldn't trade it. This is the point at which I may trade. This particular point here, we have this demand here to this loss. Even though it was even tripped, but then I wouldn't have my stop loss right on that line. We have it like 50% of this entire zone, which is like it will be around there, and then we'll be able to cash out these moves. That is the only point I could have traded. Every other point I wouldn't trade on this coin, except this supply zone we have here now. This supply zone is a tradable zone because we have this big candle, then we have this base. It definitely went up, but it didn't close above the highs. So it was a base. Then the next candle was a very bearish candle, engulfing not just the body of this last candle, but also the highs. I want my engulf candles to engulf the whole body, the high, the lows or the highs if it's bullish, not just the body. I will explain that also in the next lesson. So this is a demand, a supplier I will personally take. This one is sure for me that I will take it. And then if I take this, I will be expecting price to come to this area, this particular zone. Even though I won't take this zone, but I will be expecting price to come here. So this is what I'll be expecting on this particular movement, like this, something like that. And that will become, on this Elliott wave, that will become something like A, B, C. And then we can continue to the upside. Are you getting it? Are you getting it? Hello, are you there?
Yeah, I'm here, sir.
Okay, so any other one?
Someone else should suggest a coin for us.
There are only 3 people left. Others have left.
My battery is down, so I might go off anytime 1%.
Wow.
I'm using my power bank. So
wow.
Within just in 5 or 10 minutes time, I'll be back.
Oh, okay. That means we should just call it a day then.
No, sir. I'll just
Your battery is on, there will be left with just two people, or Raymond and Femi, or you have any other question or any suggestion.
Either of them can suggest a coin for us, or you can use any coin that you want to, sir.
Me, I don't know any coin. No.
Hello.
Hello,
Yeah, boss.
how you
Hi,
doing?
hello.
How you doing?
I'm fine, boss. This is Famo.
Oh, Famo Shema, I greet you, sir.
Boss, nice.
I greet you.
Madam, sir, I've been listening to you since. Yeah, thank you for everything, boss. Thank you for the free education and valuable one you've been sharing for us in the group and everything.
Thank you,
We do
thank
really
you, boss.
appreciate it. Yes,
Same
sir.
here, sir. Thank you.
So, which coin do you want us to look at before we call it a day?
Actually, boss, my day has been so hectic. When I joined the group, when I checked my time, it was 20 minutes after 8. I was eating by then. I even wanted to call you to come and
Oh,
join.
okay.
I just
Thank
rushed
you.
the food. Just rushed the food and just check the videos and everything. Actually, I don't have any coin I'm looking into presently. I even
Okay,
saw the market kind of dumping now or something.
let me
What
see.
is happening?
I
I
bet
just saw BTC.
and BTC was
2002.
BTC was correcting. Let me see it again.
Okay, and it's affecting those altcoin everything.
Yeah, it's affecting them, but it's still sitting tightly on demand. So 5 minutes to close. If it closes like this, then it's still good, because every time this demand has been tested, it has closed above it. So I will still expect a close above it to show that there is still money at this particular point. So in
Okay.
5 minutes time, we have to see that. And the next candle will determine what is going to happen. It's either we eat deep into it or we go back to where we are coming from. So
Okay.
it's normal.
Okay.
It's normal
So,
because
boss.
BTC has been very heavy. It's been very heavy to go up since. So something must happen. Is that a down movement or an up movement?
Okay. Okay. Boss, actually, my most of my questions will be support and demand. I
Supply
think
and
you
demand.
posted a video in the group today.
Yeah,
Yeah, supply and demand. Sorry,
yeah.
you posted one stuff in the group. I've downloaded the stuff, but I haven't getting much time to go through the video.
All
So
right.
once I watch the video, of course, I will definitely have a lot of questions because it's what I've
No
been waiting
problem.
for ever since.
No problem.
You understand?
You have it at last. You have it
Yeah,
at
boss, for
last.
real. Because I know saying that your real techniques with that. So definitely we need to learn it too.
Yes, that's the only technique I use. And it seems to have
Yeah,
been seen that
supply.
it's working. That's why he wants to learn it.
Exactly. I've been hearing so many people talking about that, and I don't know any techniques about it. So
It's
just
actually
thank God
good.
you are starting it.
Yeah, it's good. It's good. You just have to follow it with art and just filter out the good and the bad traits. Once you're able to filter out the
Okay.
goods and the bad traits, then you'll be okay.
Okay, we should be expecting more of the supply and demand video.
Oh,
Right?
it's coming. It's not ended though. That one, that video self, I could have divided it into 3. But then once you start making these videos, it just takes all your momentum. You just keep pouring the ginger into it. That video,
Okay, that first
video,
one is like a preliminary, right?
yes, that video is just the creation, how the demand
Oh,
zones and the supply zones get created, what makes them to be
oh,
created. And then I also delve
oh,
into a bit of identification, how you can easily identify the zones. But the next video will be basically identification of the zones, then how we can filter out the noise. You remember when I was talking about this CVC that Kingsley was mentioning about, I was saying I wouldn't take that particular trade. That was
okay.
because of the noise. That's how you personally filter out when it comes to that trade. Like all these trades, I said I wouldn't trade this. Of course, these are based
Which
in the
one is that?
market.
Okay, CBC.
CVC USDT. These are based in the market. This is also currently running a base, and we are likely to see a move to the upside. But then, if the move to the upside happened, I wouldn't trade this. Apart from even considering the fact that we might have an ABC movement on this move like this. Oh, this thing. On this like this, I mean, we might have an ABC movement like this. If we even have a demand zone at this point, I wouldn't take it, except we have another red candle after this green candle. If not, I wouldn't take it. That is the
Okay.
filter. So the next video we talk about pure identification. And even this zone, if it's even a good demand zone, why you shouldn't take it? So we got into a lot of details on identification and filtering out good and bad zones on the next video. Then even there will still be another one again. And again, a lot. The
Okay.
supply and demand video doesn't end.
Doesn't end.
It doesn't
I
end.
mean, we are ready, boss.
It doesn't end. So it's interesting. It's
Um,
actually interesting. And also I'll be explaining with two methods, using the engulf and using the inside bar. Like I said, I had an indicator. I have an indicator, a new indicator which I just made that I will be sharing, invite only. So I'm using
okay,
three
it
methods
works with
there.
the supply and demand.
Yeah, any zone that yes, it's for supply and demand. I've used three methods to make it. Three different methods. That is an engulf, inside bar, and three white soldiers or three black crows. So those
Wow.
methods I have refined them to what I personally would take. That is why you have this slight different colored candle here. That is showing me where the supply is coming to the market, genuine supply. And here we have this slight blue, not as blue as the other one. That is showing demand. And if you look at it, if you look at the demand here, it's holding. You have a slight stop on, but then you don't want to put your stop on the exact line, right? You want to put it just a bit down. Then here again, you have this slight one. If I should mark this, as you can see, we got a sharp retest here. It didn't take out the on, it didn't even on this one at all. And then we have a rally to the upside. So this particular one and this particular one are the only trades I could have taken on this. That's the indicator also giving me alert on whatever the alert I've set. Now here we have a supply. Here we have a supply. So the moment it gives me the alert, I want to look at that corner and place another pending order. So you have a supply here. This demand here that came here is not quite a good one. You still want to look at it with eye. This demand that came, as you can see, the color is different, but then I wouldn't use it. Why? Because the high of this candle here didn't quite go above the high. You can see it, right? The high here, the high of this candle didn't quite go above this high. I want this to completely overpower the BS. Show me that you are overpowering
Which
the
candle, sir?
BS. This slight blue.
Okay, the blue. Okay.
Yeah, it's an engulfing candle, right? But it didn't quite go above the high of this red candle.
Okay, look.
That is the reason I wouldn't take it. It's higher than it, but I want it to be extremely above. Look at this one. Look at this one here. See the bearish action here. But look at the way this one went above all these highs. It went above it clearly. Then if you rule from if you take the zone from this point, if you take the zone from this point to this point here, you can see it just came into it with deep wick. It didn't even trigger the stop, and then it went back. If you use your 3R here, as like I do, I take my 3R. Let me measure it. Okay, this is the method I was talking about for the stop, where you have your zone, the 50% of the range, you add it. So this is the point at which I want to have my stop loss. This will be my entry. And when this week came into it, this is 3R. It gave me my 3R, and after giving me my 3R, it's coming back to the zone again. Enter the zone again, and it's giving 2R. Then after that 2R, it went out to give like 2.5R before coming out to take out stops. So if I've taken this to 2 times, I could have gotten 3R, then 2R. Are you seeing it? Yes. And then if you look to the left again, this one is not even quite good because the close above this red candle size is not much, but then the zone was still holding. And then the zone was still holding. You see it's swinging into it and going back up now. So we have to see
Sir, a
whatever
quick
decision
question.
is going to happen.
If you had placed,
Yes?
sir, a quick question.
Yeah.
If you had placed your demand now,
Yeah.
at the and if you had entered at the last demand,
This one.
the last demand, not the
This
the
one.
last demand now, the blue candle.
This one or this one.
No,
This very one.
The last candle by the right, I think.
The one that,
Which
yes,
one?
yes, that one, yes.
This one the mouse is on.
No, the current one that he's at now.
I'm not
No,
understanding.
shift to the left.
I
This
think
one.
he's talking about that big engulfing
Shift to the
candle
left.
on the left.
Just shift your candle to
This one.
Okay, from the current candle you're at now, 1, 2, 3, 4, 5, 6, 7, 8. The last 10 candles. No, that one you're far away. The center. Let's say you are the center of the last demand now. The one in front, the one that wicked in.
Okay, this one.
Yes. Now shift again. The third week.
To the right. To the right or to the
Where is
left?
the arrow? Let's.
Now let's assume now that you entered via this demand now,
Yes.
and when would you now sell? Assuming you are not using your 2R or 3R,
I'm using it.
and
I'm
you
using
are
for me
you
to
are looking
calculate
you are look
for me to calculate my position size means I'm
Position
using
size.
risk management. And for me to use my risk management means from 2R, I've started trailing. If I don't even trade from 2R, 2.5 or maximum 3R, I've started trailing. So once I get to 3R, I don't care whatever the price is going to do. I'm securing my profits. But if you do not trade with maybe risk management and you enter at this particular point, then you are looking for the next supply as a point to sell. And where do you think that should be? For this to go deep into this zone means you want to look at this area to sell. And like some people will do, some people will use the last green, not the red. So if you're using the last up green candle, that means you want to sell at this particular point. And then we saw the price coming into it and coming back down. So this area, anywhere here, will be a point at which you want to sell. Do you understand?
Yeah. So assuming I want to sell there now, because
Yeah.
if I enter this trade now, that will
Yes.
be my target.
Yes.
Since it has tested it, I'll be expecting it to go and test it again.
Yes.
Where the current where you're exactly pointing now
Yeah. Also, there is one thing.
before a retrace down to
There is
the
one
demand
thing.
that you're talking
Because sometimes we have huge movements. Sometimes you want to look at the distance from the creation of the zone to the top it's made. So the top is where you want to say, assuming this was the creation, then the price went from all these points to these highs. That means you want to look around these highs to sell as well. That was the highest I made before it started coming back to retest the zone. So you want to look at this point as of first target. And for you to look at this point as of first target means you want to find a supply at that area, because front running might happen. Price may not quite reach there only to come back. And if you were to be waiting for this point after failing here, you never got there. And now you might be stop hunted into another even demand, into a lower demand, stop hunted into a lower demand. That is why you want to look. If you are pressing your stop loss, you want to see that there is no demand zone on another time frame. Just
Below.
at that point, you are placing your stop loss, because that demand you are taking may be stop hunted into another demand where you have your stop loss, and you won't know that there is a demand there. Are you getting it?
Okay, Chief.
Yeah.
Sorry that I'm just coming late. I want to quickly ask.
Okay.
So, for example, now if you are
looking at the
using,
current structure.
let me quickly ask my question, please. So if you are
Okay.
using, like we are using our demand supply strategy to take entries, and let's say you do your analysis on a daily time frame,
Yes.
and then maybe you come down to 4-hour time frame to check for possible entry points.
Yes.
If you go below the 2 hours, let's say you go down to 2 hour, 1 hour, and then you still see that there is another demand that is being created just below where you want to put your stop loss.
Yes.
So in that kind of case now, because it's sometimes you might do analysis on 4 hour, and then by the time you go down to the 2 hour and 1 hour, you still see that there's still demand down where you would have put your
Let's
stop
use
loss.
this one. I think this was it. We
Okay.
use one coin, or is it CVC? Which coin did we look at? Okay, I think it was LTC. LTC, BTC, I think. Okay, I think it's LTC. Okay, on this
Okay.
LTC chart, I said I will have a supply zone at this point.
Yeah.
I said that we have a supply zone at this point. Now I expect price to come into it and then go down. Then we went into the 4 hours. And when we went into the 4 hours, what did we see? We were looking for the origin of the move, where there was base before the rally downwards or before the drop. And then we refined. Okay, let me mark this quickly. This was the beginning of the zone on daily time frame. Then we refined this zone to this particular area on the 4 hours. You know, the zone was from here to here on the daily, which means you also have your stop just above this. But then you may not enter at this particular point, but here, based on sometimes you see a big wick into it, not knowing that it's testing even a lower time frame demand or supply. Now, if we are to look at this area on another time frame to see if there is even another zone at this particular point where we want to place a stop, assuming we are placing a stop around here now. Now let's go down and see if there is even another demand zone on those around the area. Let's see that quickly. We see a turning point already. This is a turning point here. This is a turning point here. So let's see if there is a supply zone there. Okay, this seems to be like a fake movement, like a fake out, but then it was also a base for this movement downward. And we have this low broken by this low, and this movement that broke this low originated all the way from here. That means there is possibility of a demand, I mean of a supply from this particular region up to this area. That means your stop shouldn't even be here, it should be like above here. Then if we even look to the left hand side more, we have to find some more zone. We can even see a lot of mini supply zones. Like if we look at this mini movements like this, we have these mini movements. What are we seeing there? We are seeing a bearish market structure, and an eye that breaks the low, an eye leading to a lower low. You know, there must be a supply there, even if we are not seeing it right here, but there must be a supply there. That means this point we are placing our stops is not a good stop. I mean, it's not a good point on the lower time frame. Sure, you get it?
Yeah.
So you want to be sure that that point you are placing your stop, there is no other stops there. But I don't use the 1 hour, I use the 90 minutes instead.
Yeah, makes sense.
So here on the 90 minutes, there is definitely a supply here, even though it's not a good one. And then it has this week just up to this extent. So you do not want to place your stop on that particular level at all. And looking sideways, we have this kind of support and resistance level here. So that's it. This might not be a good time to look at this particular lesson. But there is let's see if we can get from BTC.
Boss, your screen don't come. Oh, I need to see your screen again. Oh,
You say?
I need to see your screen again. Oh,
Why?
Yeah, I'm still seeing it.
Why are you not
yeah, from
seeing
my
it?
own side here.
I think
The
it's from your
screen
own
is
side.
showing.
Are you seeing it now? Are you seeing it?
I'm seeing this now. Sir.
Oh, okay.
I cannot see it. Thank you.
Oh, okay. Now, at the end of the day, this BTC has closed bullishly. Not quite bullishly, but then we have a close above the zone. That means there is possibility that there are still leftover funds on this demand zone here. So this next candle, how this next candle closes, will then point us in the direction the market wants to go. So let's assume, let's trigger
From here,
this.
you can see that. Okay. I'm just looking at this chart now. This is the lower high that we are seeing here.
Which lower?
From that last,
Okay, from this one.
Yeah.
It can be a lower high, but then lower high to this, but then it's not yet confirmed based on the movement of this current
Based on
candle.
the-
So until that current candle closes, before we are certain that
Closes.
it is a lower high. So let's look downward on this particular area and see if we can get. We want to place our stop anywhere below this low, right? This is for our. Let's start from the 1 hour. So okay, now look at this. This is a proximal of the demand. So if you are placing your stop around here now, if you are placing your stop around here, what are you seeing at this point? Is basically support, some resistance, which you expect to turn to support. That is also not a good point, because people are likely going to buy this area now as resistance turning to
As
support. You
resistance
understand?
turning to support. Yeah, yeah.
Exactly. So resistance and support and resistance trader are waiting to buy at this current line where you may be placing your stop loss. Are you getting it? So that is the only thing I can see here so far. So on the 1 hour, there is no demand except lower. Let me look on 90 minutes. You see support and resistance. Let me look 45. See support and resistance, 30 minutes. Now we have a little demand just around here, but not that particular line exactly. And the 15 minutes. And the 15 minutes, do you see anything here now? We have a demand zone here on the 15 minutes. Can you see that? You can even extend it all the way here. Can you see that?
Yeah, yeah.
So we have a demand zone here. So where you are placing your stop is just a bit above another demand zone on the 15 minutes. So you get it. So we want to be careful with that. But sometimes we do not want to look at lower time frames too. We just want to be stubborn with our stop loss. That okay, if I'm getting stopped there, yes, because we have to look at the structure, especially like on this daily time frame now. On this daily time frame. Look at this daily time frame. This is a low to break. This is a validation. Quite all right. It's not even made an higher high, so it is not the low to break. This is a low to break. Assuming this price movement then comes all the way from this point, and then it triggers this low. Are we going to look that okay, once this low is broken, we want to look if there is demand on that? For this low to break, we know that the structure is changing on higher time frame. So even if there is a demand right there, we know the structure is just for a little dead cat bounce and then continuation to the downside. Except to play dead cat bounce, then you can. But then if this is your main time frame, always make sure that number one, okay, let me say it this way. Now this is invalidation for this current move, right? Assuming you have your demand zone here and you want to place stop loss around there, then you can go lower to see that there is no other demand at this point. But if this is the only demand you have and price is coming there and this should be your stop loss, leave the stop loss there because that is an invalidation level. Once that level breaks, there is high probability that the market is reversing. Sure, you get it. Do you understand?
Yeah, makes sense. Although sometimes it always feels like if you are looking at lower time frame, like checking to make sure that there is no, demand where you're placing your stop, it's like you're always going to see something.
Yeah, that is why
You
at times,
understand?
if the invalidation level is at that point, you are taking a demand, just put the stop loss
Demand.
there. But if it's mid range, if it's assuming now say this
Oh,
is
yeah.
invalidation level, if this is an invalidation level, this demand is right on top of the invalidation level, then you should believe that once this level breaks, the market is reversing. Just put your stop loss. But if it's mid-range,
Stop
is
loss.
distant from the invalidation level,
Yeah, then you know
then you
that.
can want to look lower. You may want to look lower to see that
No,
there is no
yeah,
demand there.
makes sense.
So
Any question?
I'm interested in your risk management. You
Okay.
can go back to CVC or LTC, where
Okay.
I got taken out at the week. I knew that would happen, but I felt if I wasn't online and because I expected the price of Bitcoin to drop. So
This one,
what would
let me.
you? Yes. So no, okay, not this one. I think XMP.
SRP.
No, hold on.
Okay.
there was a coin before. There was a coin. The one of the coin that you used besides LTC and CVC.
That
I,
was
I, I
BNB.
no, not BNB. The one before, where I was talking. I was asking. You mentioned your risk management there. It's not LTC.
Are you sure?
Yeah, before Deumi asked a question.
Oh, okay. That was, I think, this one, SFP. Was it? Is it this one?
Yes, exactly. Yes.
Oh, okay.
So on this coin now,
Yeah.
because assuming I didn't extend, I'm not on this trade now.
Yeah.
Because when you look at the past history, you see that those two highs, those two double tops there.
This one.
Yes, you see that it is a test of supply, the last supply that was formed by your left. There's a supply there. I'm taking that as supply.
This one.
Those are the double tops. Yes, those are the double tops. Then when you extend it on the 24th, from the 24th, yes, exactly that place. Yes, down. No, up, down.
A supply is up now, like.
Yeah, there's supply there. Then there's also a supply down too. So I want to, what you drew now from I want to draw that top to the down. Yes, like this.
Okay.
Now, if I wasn't in this market now, and I came in and I saw this, because I'm looking at the current price action now, the last week of demand, and I didn't set my risk management, my 3R, because I don't usually use that 3R sometimes.
Okay.
So I want to see you draw your 3R. How would you go about it from the last week of demand?
This one. You know, we
Yes.
have some demand on top of demand. We have one here. Then we have this other one.
Yes. Now
We have this other one.
now that, yes, this one now that you just,
This current
is what
one.
I'm talking about.
So how will I do the
Yes.
3R?
Yes.
Okay, it's simple. Just, you know, this is the boss of the what's it called, of the demand itself. Just take this. Just take it like 1. You see that's 1. Then take it again, 2. Then take it again. Three times of that boss. 3 times. So that's 3R. The first one is a 1R. The second one is a 2R. The third one is a 3R. Or you can use Fibonacci, like I use Fibonacci to do that. Let me show you. I use Fibonacci to do that. So this is the demand. You see, that is the zone itself.
Boss,
Yeah.
I almost asked about that, the way you use Fibonacci to get your 3R. I think you need to teach us that.
That's what I'm showing right now. So,
okay, thank you.
So this is the Fibonacci, and this is the zone. So this is 0, this is 1. Then let me just change it to 3R right now, demand plus R. So that is 3R. But then the first one I showed was the one plus the stop loss, because I want to use my stop loss to be 50% of that zone itself. So I add 50% of that zone itself to it, because sometimes market can be crazy. So let me show you the settings for this one now. So this is the default one. So as you can see, I have 0 here. That is 0, which is this particular point. Then this is 1, which is this particular point. So 0 to 1. Then the 1R will be at 2. And the 2R will be at 3. While the 4R will be 4. The 3R will be 4. So if you place this setting on your Fibonacci, you can preset it as whatever you want. Then once that is done, anytime you have a zone, just deploy it from the top to the bottom, or from the bottom to the top. It will then give you the position of your 3R. This is 1R, this is 2R, this is 3R. If you want to continue adding maybe 4R, then 4 is 5. Just add 5 here. As you can see, it has shown. Then 6, like that continuously. I say 36.
Okay,
so like
thank
that
you.
continuously. So it continues. So that's it.
But that one, you can only do that on the paid version
On
of TradingView.
on
You can only
TradingView,
do that
yes.
on the subscribe
No,
premium
no, no, no.
version.
You should be able to do it on the free version too, I think.
Okay.
Yeah, I think.
Okay.
Because this question now is very important now because of especially if one should wake up suddenly
Do you
at
know
night
why? Do you know
and
why you need to be trading with risk management? Eh?
risk management. I think risk management also involves you having your stop loss
It
below
involves you having your
set.
stop loss. Stop loss is even the key in risk management. Stop loss is a key. There are some traders.
Beside,
Yeah.
no, I'm talking specifically now for these these markets now.
Yes.
If I have, especially, and based on my entry now, because that entry now on that week, where it weeks now.
This one or this last one?
No, that's one. Yes, this one. Yes.
Okay.
Now that entry now.
Yes.
If I'm not using my trial, I'll be using it. I'll be using percentage. Usually, maybe if I have 10%, I would go out of the market. But I have a target, which is that higher supply, not the one you've drawn out, the one you did not draw.
The top one.
Yes, the one you did not draw. Now I'll be targeting based on the week of the demand. Now I'll be having my supply target above now. So if I don't have this 3R now, I would most likely be giving back to the market now because you can see the thing is retracing.
You might even be entering loss now, sir. You'll be entering loss because
Yes,
the advantage of using all this R, you can use, some people go for 5R, 10R, and like that. Okay, wait, let me deploy one other one. Assuming we have entered there up to this point and this is a stop loss. Let me deploy the another one. I have one, not this one, max. Okay, see now. You see this R from this entry now. This is 1R, 2, 3, 4, 5, 6, 7. I've done this up to 7R. So now, if you have entered at this point on this week, then the market only gave 1, 2, 3, 4. It only did 4R or almost 5R before it started reversing. Can you see that? It did almost 5R before it started reversing. But if you are not using like risk management means you are placing your stop exactly at this point, or if you don't want to place it at that point, if you are placing your stop here, assuming you have your stop loss here, that means on this market the stop is wide. It's very wide from your entry to your stop. It's like 70% alone. Oh no, sorry, it's not 70%. It's like 13% alone, almost 14% for that entry to stop. If this is your stop, and then you have this entry, see how many R did it give you? It gave you only just 1R because it's wide. It is a wide zone. Was it Dr. Delmi that asked the other time that is it better to use small amounts on a wider range or large amounts on a wide range?
Yeah.
You remember? Now look at this particular zone here.
Yeah.
14% zone, but then it did only 1R. If you are risking $100 on this zone, at this particular 1R, you are making just $100. But then, if you are risking a lot, $100 on this tight zone, here you'll be at this point you'll be making like $400. You see the difference? So if you are using a wide stop, then you want to double your risk, and at least before it gets taken out, it will take time. So you want to at least use like $200 risk or $300 risk on big zones. So where you place your stop is solely dependent on you. You want to place your stop as a place you believe you won't be taken out. So, but when you use a wide stop, when you have a wide stop, just make sure that your target shouldn't be more than 1R. Just go for 1-to-1 and close your eyes, because the market can turn. At times, it may continue to move up, but it may be very, very unlikely. And when you enter without having risk management in mind, some people even aim at this side that if this move is up to here, then this correction, they will see it as a bullish move like this, something like this. Like from this low, sorry about that, from this low, high to this side to this low, Yeah, they see it as a bullish move. Even say if you take this as a valid low, that means you are bearish already on this move because this invalidation level has been taken out. Then we have this correction to the downside, which means this is now 0 to 1 to 2, and now we are expecting 3. We are even expecting it to even go lower than this if this is a structure. But if that is not the structure, some people will be saying this is it, some people will say this is 1, 2, like this, and then they expect higher high. So some people are waiting here to take their profits. So when they enter at this point, they believe market is coming all the way to the top. They believe why they enter at this point, they believe market is coming all the way here, 37%. And then what happened? It got up probably to like 20%, or how many percent is that from the entry? It did up to 20%, and then it's coming back to entry, and even now it's way below entry. So if you have your stop here, you are taking out already into another demand which is there. But if you have your stop here, you still be in the game, but there is possibility of getting taken out. So you want to calculate your R. When you calculate risk using all these position sizing, and then you are using maybe 1R, 2R, or 3R, it allows you to get into the market quickly and get out quickly. So it doesn't hold you down in a trade. And even if you look at this particular zone on lower time frame, let's go to that 90 minutes and see if we'll get anything on this particular zone. Okay, at this particular zone now, you see there is even a little demand there. You want to even bring it lower. That means you are even having the chance of getting out quicker than before. And if you look at this point here on lower time frame, you even have a supply here elsewhere. You have a supply here as well. But then if you are able to going lower, you might even have another demand even lower than that. Okay, now see again, we here at this point, we even have a demand which is even lower than that. Let's see if it gets fit. And this market has done what? It has wicked into the lower time frame. This thing, you see, it has wicked into the 30 minutes demand zone and then wicked out. Now let's see with that our theory how many we will be able to cash using the 30 minutes zone. If we refine it up to that, see you see now where did it? Okay, this is it. Now can you tell me how many hours is this? If you have refined your 4-hour demand zone to the 30 minutes demand zone, and then you are lucky it got filled. Now from the filling, you have 1 hour, 2, 3, 4, 5, 6, 7, and it's not yet finished up to this point. That means you are having up to 20 hours already. So if you are risking 200 on this particular trade and you just be riding the trend, you may get up to 2,000. Who knows? Are you seeing the essence of having risk management? But here you might not have entered there. You'll be waiting that okay, you even say your position size will not be enough to earn you as much as they are will earn you. Maybe now you are using 10% of your portfolio. Assuming you have $1,000, you are using 10% of your portfolio. That means you are placing $100 as your position size. Yeah. Then let's calculate the percentage from here. Or let me go back to that. Okay, from this entry to the highest top. That means you have 16%. $100, $60% of $100 is how much? 16.95.
$16.
You have $16, right? But then you that you have $1,000 and you are risking 2% of that $1,000 to stop loss. How much are you risking? That means you are risking how much? 2%, which is you are risking $20. So if you have reached $20 to this stop loss here, and now you have, let me do this. Let's be sure about this. Why risk management and how this is essential. So here we should have 9. We should have 9. Here we should have 10. Then here we should have 11. Then here we should have 13. I'm sorry, 12. Then 13. Then here we should have 14. Here we should have 15. Here we should have 16, right? Then here 17. Now we are not even at the top yet. Almost. Then here we have 18. I will stop at 20. Here we have 19. Here we have 20. A lot of darkness has come into this thing. Let me remove the colors. Okay. Okay, now let's count from this entry. You are risking $20, right? Now let's count from this entry to this particular top. It's not even at the topmost top that you have earned $16 on your $100, 10% of your account entry size. So now let's count. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. That means to this point, you have 19R. And if you multiply that 20 by 19, 20 by 19, it gives you how much? $380 profit as at this point. Are you seeing the difference? What if you are able to take the R up onto this point? That means you might even have $500 profit from this trade alone, just from risking 2%, which is $20. Because the position size will be able to take, risking that $20 will be higher than that $100. Now let's see, we have the stop is like 0.63. Now 20 divided by 0.63. That's 0.63. Okay. That means you'll be taking like 3,000 or let's say 3,200 position size. So you see the difference. Why using risk management can earn you much more than when you use your just some percentage of your balance. Percentage of your balance on this full trade up to this extent where you just $16. Whereas risking just 2% of your account balance to stop loss on this trade will earn you up to $500. So that's the difference, and that's why using risk management pays a lot than just putting an amount of account balance into the trade. That is the difference. Sure you understand?
Yes, sir.
So that's it. All. Any other thing?
Using this your R now, setting it up now is what I'm not sure I really got. I will have to try it.
You can send me
Try
the
it
picture
out.
so
But
I'll
you
see.
use
It's easy.
Fibonacci?
Just go to your Fibonacci. On that Fibonacci, that's Fibonacci. When you go to the Fibonacci, just place the first one, 0, 1. This one, the 0, 1 is a default from the point at which you are drawing to the low point. The low point is a 1. So the 0 is a starting point. Then the 1R will be 2 because you have 1 already. The 1R will be 2. Then 3, 4. 4 is 3R. Do not take it as 1 is 1R, 2 is 2R. No, it's always plus 1, plus 1. This 5 now is 4R. Are you
At
getting
what
it?
point do you draw it? Is it from your entry where you place your demand to where you decide to do the supply? Because I usually set my because I use the short and long position that is on trading view.
That one is also
Then
good now. This one is also good. Like this. That one is also good. Then you just have
yes,
to
this is what I use.
it's also
This
good
is what I
to
use.
then you just have to adjust 3R or 4R. Then you see your R here. 3 point risk reward ratio.
How do you get 3R from this from using this?
That's it now. Look at the middle where you have close profit and loss. Then below it is just risk reward ratio, 3 point something. So you just have to elongate or reduce. You can see the figure is changing. So you just have to
Yes,
be
yes.
seeing that at that point that it gets to 3 point something R, then you know that is your take profit. If you are going for 3R, if you are going for
In this
5R,
case now,
just draw it
from
lower.
what you drew now,
Yes.
which one is the R the 4?
Which one is the
What's
current
the
R?
3?
Yeah, the current R at this
Yes.
point now is let me take it to that 4. This is 4.03. When I say R, I mean reward. Yeah, I just say reward.
Yes,
R
yeah, I
for reward.
understand.
So at this point now, that is 4R. 4.03 R.
Okay,
Yep.
okay.
So what are that now?
Well, sir, you know this would have gotten to the top of that demand if not for Bitcoin reaction, because I think it's
Definitely.
like dragging it down.
Bitcoin, I ain't the
Top of which demand?
Sorry, Supply, sorry.
This supply top
Yes,
at
because if I
times,
was in this trade, I
yeah,
would surely lose this trade. I would, if I
Because
was
you'd
in
have
this trade
waited,
now.
Abby.
he wouldn't have
Yes,
taken profit on 3 hour. So if I see the wait.
And that's why moving your stop loss to entry at some certain points is usually,
Yes, it's essential. Yeah, that's true.
it's
That's true.
essential.
That's
I
true.
know
That's true.
the danger is, or the fear is that, in such a market, it can go and hit your, maybe if you have moved your stop loss to break even, it can hit your break even and continue moving.
Then you
yes,
close
and
size.
But
Then
continue
you
then
close
moving.
again,
size.
exactly, then you close that,
You
exactly.
close
So
size and move on.
now move on.
Or
Because
you can even choose
capital
to re-enter
preservation,
if you still believe that the market is still bullish.
exactly. You can even re-enter.
Yes. Let's look at that BTC again, sir.
So there's this new technique, or if it's on the ground already, but there's something I do now.
Okay.
Anytime I trade hits my take profits, I
Yes.
take out 75%. I
Then you
don't take
leave the
out everything.
remaining.
I take out 75. Then I don't just leave the remaining. I now re-enter with half of what I entered with previously, especially if the market is still in a bullish, like in that case
Yeah.
now where it didn't reach the top and I feel that it can still reach the top. I will
Yeah.
re-enter with half of what I used to enter previously at my entry.
Yeah.
You
That's
understand?
very
So
good.
that's what I've been, yeah, that's what I've been doing lately. And in fact,
It's
I've
working.
had
It's good. It's
that
good.
soul. You know that soul USDT that made one crazy move like that.
Yeah.
I have been, I have been trading that thing since like more than 1 week now. So anytime it hits my TP, I just take 75%, add half again. If it hits another one, take 75%. So that's what I've just been doing.
It's good though. Even
And I
if the
just
new
started
trade
doing
now,
that recently.
yeah, if the new trade even is stop
Yeah.
loss, it will be just a fraction of the profit you have
Exactly,
taken
a
already.
fraction.
So you still be in
Exactly.
profit
So
overall.
I still be in profit.
Yes, it's
I
very
just
good. It's
started
very
doing
good.
that, and it makes sense.
It's very good.
Yeah.
I also
I did this thing on XMR self. You can check XMR, sir.
SMR,
BTC.
USDT,
BTC.
daily or 4 hour. Wow.
4 hours.
Wow. I remember the time I did this, looking for this thing to pump. It did it. Wow.
So I entered somewhere around sir, can you shoot back to the history?
This 1080p is too small for me. Oh. The whole
I
thing is
entered
just too
somewhere
small.
around
Where?
I entered somewhere around
Just tell me the price. Let me rule it.
that's what I'm to be sure. Somewhere, I think, yeah, I entered somewhere around 4,800, I think. I'm not sure. Like, yeah, I think somewhere around 4,800, and I don't know what happened, and the thing dragged me down. I watched it go down. So from the point at which it's entered
That's this
and created
point.
demand, I entered, yeah, somewhere around there.
Let me squeeze it. Can you still see it clearly?
Yes, I can.
Okay, somewhere around
Yes,
there.
yeah, exactly like this. Yes.
Why will you
exactly
enter
like
at this point? If at all you want to
I don't know
enter,
what
if at all you want to enter, this low demand
I
is a
think I
good
remember
point.
what happened. I placed a demand and the thing dragged me down, and I didn't know that the coin was there.
Let me even see how
So I
many
think that's
are
what
this demand itself even give.
I placed a
As you can
demand,
see,
so it
this
took me
particular
down,
demand
and I
self,
expected.
he even gave how many are self? This particular one, no? That's 1, 2,
Yes, but I
almost
was
3.
looking at the higher out. By your left, there's a supply that is there. There's a higher supply there. So that was what I was
Okay,
looking
you're
at.
Me,
thinking it's going to
And
get
then I
there.
the new indicator I'm using is
Yes.
not even showing me any supply. So me say I'm not seeing any supply. But if I'm to look manually, I think there is a supply all around there, sir. All around from this zone, from this region here. Why is this thing not selecting? All like this, there is a supply there. We have this low taken out by this movement, and this is the base, which is also a double top. So from the base of the double top to the top will be the supply. So we have a supply which was tested. But my indicator is not showing me demand, so I mean supply. So we say I'm not seeing supply. But here now, at this point now, in the indicator is showing me supply. which was also tested, and then let me even see how many that one is giving from this. That means if you enter this market at this particular point now, this indicator signal, indicator supply, the moment it gave it, it came here to enter, then you'll be out of 3 hours already, and then the market still continue to go down. That means you can even have a lot of men then. So it's good to trade with her
I didn't set.
rationally. It's good. It's good.
So with as what Adomi is saying, I put in $50 from the last demand that was created.
Which
Load
one?
it up. I've been riding it up.
Okay, last
Like the
demand.
current the history is done now. Yes. So I've been riding it up. You can see this last this yes. Wait, you just passed it now. That's bullish.
This one.
This thing.
This
Yeah,
very
I
one.
sold. Yes.
Yeah.
Then yes.
Okay,
So
you
I've been
sold around
re-entering
there.
like that. So
Yeah, it's good.
yes.
Okay.
So you can see now in the current current price now, you can see that there is a supply now,
Yeah, yeah.
and
But
I'm
this is not even
seeing
a good supply.
the last week now. I'm seeing a double top. No, it's not a good supply, but because of Bitcoin
The,
movement, I
okay.
sold
Oh,
the
okay. Oh,
$50.
okay,
I still
okay,
have
okay.
$250. The remaining
But even
$250
if
still there.
if you look
Then
at
I
this
bought.
move,
I'm buying.
yeah, I'm listening. If you look at this move, it's not a strong move. It's channeled. It's a sort of channeled move.
Yes, that
So
can break.
yes, it can break down. But once it breaks down,
So
this point will be a good point to look at. This point will be a good point to look at.
exactly where I placed the $50 that I sold.
Oh, nice,
So I
nice.
would I'm riding the trade but back to the supply. So that's what I've been doing.
It's even tested
It's
already,
better
Seth.
to ride it that way instead of selling.
Yeah, yeah.
Yes.
You still like trading this BTC PSO?
It's because of Bitcoin
think for
movement now.
Recently,
Double
I've
the
studied
Bitcoin.
on OGN and CTSI. It's like they follow this USD TPS follows more of the TA now than the BTC PS. Let me quickly show you one thing. Can you see this small shots, yeah? I don't know if you can see
Yes.
this small. Okay, I want to look for a particular trade I took on 15 minutes. I didn't even take it. How did I take it? Okay.
If Bitcoin is still bullish, then why shouldn't I trade? Or I expect that I will have some Bitcoin, then why don't I double the Bitcoin before it breaks supply or demand?
You say?
Just double the Bitcoin and then I now sell.
Sorry, I didn't quite get you.
Yeah, Bitcoin is still bullish. So instead of me to just buy the Bitcoin and
Yeah.
wait, I'll prefer to trade it. So I mark the price at which I bought the Bitcoin, and then the price at which I'm trading the Bitcoin with whatever pair I'm trading. So if once I make my profit, I'll wait for Bitcoin to reach whatever supply that I want it to reach. Then I now sell. Exactly, which is what I did now. You can see
Okay.
that I told you I bought XMR,
Yeah.
sold, then now set my stop loss below at 0.8% of which way I entered it.
Yeah.
Then now before which it has now taken me out now. So I'm now expecting. So once Bitcoin, because right now I don't, apart from the demand I'm seeing.
Okay.
I
Let me
don't
quickly show
know.
you
I
this thing
feel
that
like
I
it
want to
can
show
break
you
the.
there. Share on BTC that you can break this demand, Abi. We just have to wait and see. We just have to. Okay, when I show you this finish, we go lower on this time frame and see what we'll be looking for. So this is what I saw on. This is the top one is a BTC pair. The bottom one is a USDT PS. Now look, if you look at this point, that is 2nd April 2021, and this is 2nd April 2021. A demand zone happens on USDT pair and BTC pair, but then we have a base rally. We have another demand zone on the USDT pair here, which should be this point on the BTC pair, but it didn't. Now they both went up and they both came down. Now see what happened. The top demand zone on the USDT pair it held the price for the rally. Why? this point that should be the other demand zone on the BTC pair, it's just a little bounce, but then it broke it. Even the original demand on it also broke it. As you can see here, price traded below it, but price didn't even get close to the lower demand on the USDT pair. And the moment this one reacted to the upper demand, what happened? It went up. What happened? After this one has broken its own demand zone, it also went up. So if you are trading the BTC pair and you are trading this one, there is probability that you'll be stopped out on this without any chance of stoppage on the USDT pair. So the USDT pair seems to react more effectively to TA these days than what's it called, than the BTC pairs.
This particular market now is just Theta USDT and BTC.
Yes, so
Matic BTC, Matic USDT. WRX is bullish, is moving the BTC pair and the USDT pair. Then even WRX BNB is even moving. They are moving together.
we alongside with BTC.
Yes. And they made over 100% or even 150.
We'll see what form now on BTC. We have a demand now 15 minutes around this point, very wide one on 15 minutes, which happened on this pin bar. But then we want to see this trend line break. We want to see this trend line breaks before any other thing can happen. Once this trend line breaks, that means we are still going bullish. But then this one even might be haunted though. But then we are still inside the 4-hour demand. So once this trend line breaks anyway, and there is no supply creation at this point, in fact, there is no supply creation, no good supply. So I'm still optimistic about this Bitcoin share. There is no serious supply that will make me bearish at this point.
But sir, this current BTC structure is just like that SFP. That SFP.
Yeah, they are following
where,
Bitcoin.
Yes, where that SFP now, when you look at it now,
Yeah.
Before it started dropping, it has been in a long range of supply, which is what Bitcoin is currently doing now. It has left that supply now and is dropping.
Yeah. This is it.
So
it's
yes. So you can see that the supply has been down before.
Even this one now, we even have a new supply here. So we have a new supply here on this one. So it's not looking good for this coin. But then we all know that BTC can rise and all these coins will fall. So
yes.
So they are still following BTC nonetheless. Even Ciago, all of them have the same structure. All of them are not looking good. But then Yago here also has demand here, which has been tested once. So it can still hold again. But then it's like it's forming a double top as well here. So if this demand breaks, then we are going lower.
So if you place your demand now, for example, on this algo now, and it breaks, what do you do?
And the demand breaks.
Yes.
Then I will look for the supply that broke it. I will look for the supply that broke the zone and take it.
So what do you, if you're already in the trade now, you look for.
If I'm already in the trade, you know now, I'll be out already. See, TDR is achieved already. So if I'm in the trade already from here, I'll be out.
Demand now. There's a demand now. There's still a demand. So if you set your demand and you buy
at this point,
and it comes and you get filled up, yes.
At this zone?
Yes, sir.
That's what I'm saying. I will have been filled at this point and I will have exited the market. I will have left the market since.
But the price is going back to the demand.
I won't take it. No, I won't take it. Based on it's been the second retest.
That's been tested.
Yeah. So if I even want to take it, I will go lower to see that there is confirmation. You understand? So I will go lower to watch for confirmation that maybe either it breaks trend line or it breaks structure or lower time frames.
Okay, that's what I just want to
And
confirm.
look at this, look at what even made me, there was one OGN trade there. They want, okay, this one. What made me wanted to take this one? There was a supply zone here, you see. It was lower time frame. The price was moving on 9 time frame. Then I came to 15 minutes. I saw this supply, I rode it. Then the moment this supply got taken out, then I rode it and I was waiting to take it. Shall you see? So assuming this supply wasn't broken, I wouldn't take this at all. I wouldn't take it. So this type of confirmation is what I'll be looking for on that lower time frame before I take it, based on say it's a second retest. But if it's the first retest, then I will place a pending order and wait for it. Even you see I go now 15 minutes
boss,
is doing exactly as BTC, having a 15 minutes demand. Yes, sir, boss.
yeah, like the first test of a demand is the most effective, right?
Yes, it's the most important, because the idea is that there are institutions that are buying from that demand zone. They are not completely bought. Like they have 1 billion they want to buy. They are filled on maybe 200 or 300 million. So they push the price up to test that there is no serious sellers anymore. Then they come to on people's stop, or if there are serious sellers, they look at the amounts they are selling. Then if it's enough to buy, then they keep buying it. So once price comes for that first retest, that is the point at which they get filled on all the remaining orders. So if they get filled on all the remaining orders at this point, at price rallies, and then they are taking profits coming back, then there might be no other funds waiting at this point. Even if there are funds waiting, it will be retailers' funds, and retailers' funds cannot move the market. You understand?
Okay.
Yeah.
So like after that first test now, maybe you achieve your 3R, then you take profit.
Yes.
Like the second test now, maybe if probably the price now comes back to the same test of that demand,
Yes.
I not be interested in it because it will now like it will be weaker, right?
Yes, it is weaker. That's why they say continuous test of a demand makes it weaker. It's like this. Okay, look at a bucket water or a drum of water. If you have a drum of water, like maybe 500 liters, then you have 2 buckets you fetch. You know those days when we go to where to fetch water, we carry one on the right hand side, one on the left hand side. So when you go to your drum of water, you dip in the first bucket, you take maybe 50 liters out. You dip the second bucket, you take 50 liters out. You go and drop it at home. You come back again to take 100 liters. The first time you have taken out 100 liters, right, out of a 500 liter water tank. The second time you are taking another 100 liters again, and you are not the only one taking those water too. So the third time you are going there, do you think you will meet water there? The water may be dried out. The water will have been taken out completely. So look at this zone now as a drum of water. That water is filled up. This point, it comes deep into it. That means they have fetched at least half of the water out. Then coming back again, there may be no water because the water might have dried. Other people might have taken it, but there may be little water, and that little water may not be enough to meet the supply that is coming. You understand? The supply may be higher than the remaining demand that is left. And then if supply is higher than demand, the price will go down definitely.
Okay.
You understand?
Yes, sir. Yeah, bro. So now this particular chart now, you won't take this demand.
If I've taken it the first time, I won't take it, except I go lower time frame, and then I want to sit, enter into it, then come out. If there are supplies, I want that supply to be broken. Then whatever broke that supply, I will take it.
Okay.
Even say, look
Right,
at
but
this was a demand of 4 hours, right? Then 90 minutes save. As on retest of this one on that 4 hour, the moment it got retested there was a demand created on 90 minutes. I traded on 90 minutes, 4 hours, and daily. So this was a demand that was created on the 90 minutes. And what did you notice? That means here was the demand on 4 hours. It went up. They came back to fetch that water. As they were fetching it, maybe another drum was left behind, which shows that there are still some demand at this point. It went up again, came back into that other drum, the second drum. As you can see, it came here, and then it went finally up. Now it's back into this drum. Now this 90 minute supply and demand zone, what can we see? We see that price still came into it and closed bullishly above it. Now this was the other pattern I was testing. You know, if you remember on the group, I said I was making a reversal indicator. This is the same pattern that I was testing. When price is coming down, then we have a wick below this last low and a bullish close like this. I believe price always goes up. I've watched it, they always go up, but sometimes they fail. So now for this pattern to be happening on this demand zone means price is likely to come up. And now again, we have a supply on this point. We have a supply here. Now, if I had missed this entry on this 4 hour zone and I'm entering on this 90 minute zone, TDR is also a shift that will also be out of the market already at this point. TDR, I'm out. So this second tester, maybe if I see this pattern, then this other one, I may want to place maybe a stop limit to buy just a bit above it. So if this side gets taken out, then I believe the market is ready to go upside and retest this supply, because this supply has to be retested. You understand? So, but the point at which the reversal will come to retest this supply is what I can't guarantee. Based on the water that is here already, might have been fully fetched. The one that is also here already might have been fully fetched. There may be no money left here or again. There may be no money left here again. Even if you look low to the left-hand side on this 90 minutes chart, you see that this 4 hour demand, there was also a 90 minutes demand here, which was tested before creating that 4 hour demand. You see that multiple demands are being created here now. So it's like multiple tests of this area, this particular area now. This entire zone now. Oh, sorry. This time I don't know how to draw the distance. All this area now, it's like there are a series of demands on different time zones that have been tested. We have this one. We have this one on 4 hour. Then we have this one again on 90 minutes that was tested, went up. The 4 hour got tested, went up. Created 90 minutes, got tested, went up. Now, if this first one breaks, we might come back into this. But this one also has been tested again. So we might have to look lower. Even so, there is another demand here. There is another demand there. Where is it? Okay, there is another demand there. That was also tested. There is even another one here. This one has not been tested. So for this one to not be tested, that means we might be coming low to this point. This one was tested, you see. Instant. The moment it got created, it came for test, it went up. Created another one, went up, got resetted. Few minutes after, went up, created 4 hour one, got retested. This one here, it failed. The one that was created here failed. I wouldn't even take it, me looking at it. For failing to go above this side, I wouldn't take it. Then this one created, this also created, maybe stop pointed, and it still worked well. This particular one here. Now, this has broken already. This has broken already. So we expect a reversal to this supply and for this supply to hold. But is it this demand, or is it the 4 hour demand, or is it the lower demand that we make that holding, I mean that reversal to happen? Is what we can't tell, because it's been tested first. So I want lower time frame confirmation to see that price is ready to go back up. So once that is confirmed, then I can enter the trade. But the first test of demand is the best.
Yes, sir, boss. Yeah, like the higher the time frame, the stronger the supply and demand, right?
Yes. Higher time frame precedence over every other lower time frames.
Okay, like now, is it advisable to like stick with a particular time frame in trading the supply and demand?
This is what
to
I
avoid
do.
confusion, because the more we go lower to those lower time frame, like the more supply and demand we keep drawing.
If you remember, I understand. If you remember on BTC, I said BTC recently. I said BTC just keep creating demand and supply on different time frame and reacting to them. Like we have daily, it created daily demand and supply. It will react to it. Then it will create on 12 hours and it will react to it. It will create on 8 hours. It will react to it. Will create on 6 hours, even 4 hours, even 1 hour, and it will react to all. How many of these time frames are you going to look at? So the thing I do is I look just at daily time frame, even though I don't like trading on the daily time frame. I look at the 4 hour because Sometimes I don't want to buy into daily supply or buy into 4-hour supply. But the time frame I use mostly is 90 minutes. If you watch my last condition that I've set in, you see 90 minutes, 4 hours, then 1 day. Those are the 3 time zones I want to pay attention to. Because this is a bull market. One day zone can give you very good rallies. But for my day trade, it's just 90 minutes. So any zone here, I'm taking it. Any zone created on 4 hours, I'm also taking it. But then the 4-hour and daily, I can also refine them on the 90 minutes. If nothing, like this time we have something, but then this has been tested, so I might take this on the 4-hour. I'm also refine them on the 30 minutes, but I'm not looking for demand itself on 15 minutes or on 30 minutes. I'm looking for demand on 90 minutes, 4 hours, and daily. Any of these demand that I see and I'm watching for confirmation is when I will then go lower to start looking for somebody there roadside, to start looking for the supply that will be taken out on the 4-hour, like this now. Okay, now this time this zone got tested. If I wanted to take this on confirmation of 15 minutes, this is a supply here already. As you can see, that is a supply. So on confirmation, now we want to see that this supply is taken out, and it got taken out here by this demand. Then I will be waiting for price to come back to this demand. And price this came back, but it missed. That means when you are trading with confirmation, there are chances that you are going to miss entries. This is a 4-hour zone, right? And I've gone to 15 minutes to refine it, to watch for confirmation that price is ready to become bullish before I take it. I've seen this supply. The supply has broken. Now, which demand is breaking that supply? This is the demand. So this will be my point of entry. Price came here, I just missed it. You see, it got front round. So this trade, if I was waiting for confirmation, I wouldn't have taken it. I would have missed out. Sure, you understand? But then if you look again lower, there is a supply here. There is even a supply here. And this supply here, also if you are watching for break of that supply, which got broken, and then there was no clear demand of what happened. But then we saw rising 3 here. We saw 3 bullish candles. So if you are able to take the base of this particular candle, if you are taking it here, it might be fit. But if you are waiting for after all this move, there is no feeling for you. So that way too, you will have missed out. So sometimes you just see your zone on either 4 hours, you refine it, but make sure you place your entry, the first entry, place it maybe tiny amount. If you want to go 500 on this trade, maybe you place 100 there. Then you split the remaining 400 into those lower zones you find. So if at all you have a small weakening and a rally above, that your 100 will be in the market. And if your 100 is where price keeps dropping, you have more money to buy at lower demands. You understand?
Yes, sir. I can get it, sir. So this last supply now, you'll be looking forward to take it.
Yes, I'll be
Still
looking forward to
active, right?
take it. The 90-minute supply, this one. Definitely, I'll be looking forward to take it. And this low has been the trigger, so I'll be looking forward to take it. Sometimes we just have to trade level to level. Sometimes we even bull market structure, you trade level to level. This is a supply. The supply is looking good. Just trade this, add your stop above. Look to the left. Is there any other price action here? The other price action is before this level. It's at this point, which is February 20. So if you look at that, if there is a zone there, then you may want to extend your supply above. Okay, there is also a supply there. There is a supply there. You can read your supply. You can also take it to that extent. So looking to the side, it's even inside. It was even inside the supply that it got turned down. But now we have this new supply, so I'll be waiting to take that supply. You understand?
Yes, sir. Yes, sir.
It's not easy. We'll be here for like 2 hours plus.
To make money, no easy.
It's not easy, I'm telling you. Most of these things here about supply and demand, I'll be saying it in the next course, so you even understand better there. Or you can even get all the knowledge here too. Question and answer is very good. Let me even check another concept at least. Most of these coins on lower time frame now, they seem to be having supply.
Alice.
Most of them are just creating supply. But they are still looking bullish overall. Now, at least this is a demand zone now. Okay, I think I took this demand zone. Or something. I took one. Or was it not at least? This is a demand now. So I expect price to come into this and break this trend line. And also, there is also a lower demand at this point. So that is for Alice, RVN. Everything is creating supply. But this supply itself, I won't take it. You know why? I have not talked about this particular one. Look at all this price action here. Are you seeing it?
Yes, sir.
Okay, looking at all this price action. If these millionaires or billionaires are the ones selling, there is a chance that at all this point, they are finished selling whatever they want to sell. So when you have a lot of price action like this, and then you see a drop, the supply zone that's formed from there may not be valid. It's valid though, but there may not be leftover funds because there is possibility that on all these sideways movements, they have completely sold everything they want to sell. Unlike when you see just a quick movement of a small base and then a drop. Sure, you understand?
Yes, sir.
Because if you are selling, okay, it's like that example I made, going to fetch water on a bucket, with a bucket on a drum of water, and you have gone there many times. This is multiple times. There is probability that all these multiple times you have seen that the water has been completely taken out. But if it's just like this, like this, let me do it like this, like you have this movement up, then you have the first, then the second, and then a drop. And this that somebody has gone to take the water many times, like this. Which one has higher probability that there will be leftover water in the tank? Is the one with the shortest strip, right?
The fourth one. Yeah.
The first one, the one with the shortest strip, we have more probability that there is still possible to be leftover water in the tank. But this one that people has gone there several times, there is possibility that you will go there and won't meet anything. That is the same thing here, where you have a lot of price action like this, which is balance between supply and demand. If people are selling at this point, there is possibility that they are completely sold and just waiting to take profit. But if it's just like 1, 2, 3, 4 candles, then there is a probability that they are still waiting to sell. They are not completely sold. So this type of price action, I wouldn't take this supply. Even though it's looking good, I won't take it. That not me not taking it doesn't mean that it can't hold. It can hold, but I just won't take it because I don't like it. That's my rules. You understand?
Yeah.
So can you look at RCNBTC?
RCNBTC. $4 hour.
Yeah.
Yeah, it's on top of one demand right now. Demand that has reacted. Let me see how many are gave on that reaction. It's giving 3 hours on that reaction. You see, if you notice some of this demand, they like give 3 hours and bounce, 3 hours and they come back. They give you 3 hours and they come back.
For you.
That's what we've been seeing now. This one too has also done a bit above 3 hours and is back down. Look at this point now. That example, compare that supply to this particular supply here now. That last supply we saw to this particular one now. This one, at least we have this base rally up there, 1, 2, 3, then the drop. Now price came back here and it held where, but that one that has done multiple price action. Which one of these two will you take? Definitely this one. Even say my indicator reading points at supply here, but there is a supply. I've made the indicator to be very straight, very straight. Sometimes if I'm looking, maybe I should reduce the straightness. So RCN, we have it on top of demand right now. The demand I said once, it is likely to wait again, or will be depending on BTC at this particular moment. So you can just go lower time frames and then watch. Oh, all this action on lower time frame, I don't like it. Oh, this one's going to be certain times. It's just like TRS used to do in those days. One can do up, one can do that. So you can watch it on lower time frame. Watch for the break of the trend line. Watch for the break of the trend line. Once the trend line breaks, or this particular highs here, but the trend line may be quick on this particular trade than the structure here. Once that one breaks, or once the trend line breaks, it's already touching the demand already, and it's reacting quite well. So you can also take it blindly. You take it, and you have your stop loss below it. Let me set on 90 minutes. 90 minutes has a demand there. 90 minutes has a demand there. So it's right inside the 90 minutes demand. So personally, I may take this trade based on the 90 minutes as well.
I'm currently on the trade now because I set my demand at 264.
264. Okay, it's good point. It's good. Me, I will have even taken it at. I will have taken the trade at 265. Or is it 267? 267. 267. But I won't have my stop below this one. I have my stop below here because of this. Even here, this is likely to be a demand zone. But this plenty price action is not encouraging. So it's like it's a good trade. It's a good trade. But then we have a little stubborn roadblock here. Not a good supply, but it can do anything. So you want to be careful about this particular place. So just watch it how it develops. So what else? What else? Or we should call it a day. Me, I don't tire. It's not easy.
You don't try, boss.
2 hours, 2 hours, 17 minutes now.
Most of these analyses are we just need constant reminder of what we already know.
Yes.
Because looking at these charts can be
tiring.
I don't know. And then you now forget what you already do, or you'll be
okay. This was the early trade I was talking about. If I missed the entry here, it came here, I missed, not front round. So I didn't take, and it went to 3R. I didn't take it. So what other thing?
Please, I have one simple question. I don't know if it is simple or not.
Okay.
But I just feel like asking.
All
like
right.
every ranging market, or let me put it as consolidation phase.
Yes.
It's expected to lead to either accumulation or redistribution, right?
Yes.
Okay. Now, can we know upfront, like before leading to either accumulation or redistribution, like can we predict a particular ranging market, what it's going to lead to?
If you watch the supply and demand video, I talked something about that. So when you see a falling market like this, when market is coming down, then you start seeing sideways or ranging market. What is likely happening is one of two things. Either it is an accumulation or a redistribution. So the action that happens next will let you know which it is. If you have a rally from there, that means it is an accumulation. And what will you call this area? Like
boss, like until it happens, we can't predict, right?
No, because you may be predicting that it will go up, but then it will come down and then be a redistribution. Likewise, you might have it moving up like this, then start to range, and you think it will drop, but then it will go up. Then this will become a reaccumulation. That is why, if you watch that, we just watch it. We have rally-based rally. Then we have drop base, rally. So these are the two types of demand. The base are the demand zones. So here now, where is the base of this drop? It is that accumulation zone. If this became redistribution, as in drop, then redistribution, that means they keep selling again, small, and then final drop. This become the base in a drop, base, drop. So this become another supply zone. But if it happens like drop, then accumulation, and then a rally, then that becomes demand zone. And for this to even accumulate means money is coming into the market to stop the market from further dropping. And the money that was coming into the market overpowered the supply and made the market to rally. So if this action happened fast enough, like we have the drop, then we have some little base and then rally, there is possibility that the money here is still left, there is still some leftover. So you expect price to come into it, fill the remaining orders and rally up. But where you have a lot of price action like this, you have the drop, then you have the accumulation like this, a very long one like this, and then a rally. Do you think that all the people buying, do you think they are not completely bought on this market? They might be completely bought. So when the market comes down, you just see market do something like this and it breaks because they are completely bought and then they have sold at this point, only to drive the market lower. Everybody that are then buying here, their stops will then be triggered at this particular level, only for the market money to start buying again from stopping out people. Then you see markets coming back up again. You understand?
Yeah.
So a lot of things happen in the market,
So
a lot of things. But you cannot exactly predict a ranging market, how it will go. But the way you can predict it, the only way you can predict it is if you have a fall like this, like you have your drop like this, like a parabolic drop, then you start seeing something like this happen. You see it making like higher high, higher lows, higher, but in a small bit,
direction.
then you know that this one is definitely going down. But if it happens like this,
Oh,
because it creates a pattern, then it starts coming like this, like a falling pattern, then you know that this one, the momentum is weak to the downside, then it's a reversal pattern. So this is also an accumulation, this is a redistribution. But if it happens like sideways, exactly sideways like this,
sideways.
that
Yeah.
one you cannot predict. You just have to wait and see.
Can't predict.
You have to wait for the highs
Okay.
and the lows to break to either side and see how it breaks the volume to see which direction the price is likely to go. Shall you understand?
Okay. Yes, sir. Thank you.
I know, be sir. So what other thing?
Yeah. Yes, looks like those other guys are doing something else.
There's not much thing again, sir.
So we should call it a day then.
Yep.
All right now. Thank you all.
Okay.
Until next weekend
Thanks,
then.
boss.
Yeah, thank
All
you.
right, thank you, sir.
All right, boss.
Okay.
Thank you, sir.
Thank you all.
Yes, sir.